Jó napot kívánok! Welcome to Innovation, a bridge to a sustainable gas future, the official IGRC2027 Budapest podcast, a show where we talk about the current state and the future of a global and sustainable natural gas industry. We give you a universal perspective of the gaseous energy sector, leading practices, new trends, and traditional solutions, industry insights, and new investments which will shape our future. Please don't forget to follow us on LinkedIn, Spotify, YouTube, or wherever you get your podcast. Enjoy the show.
Dear ladies and gentlemen, welcome to the third episode of IGRC 2027 podcast series. My name is Tamás Pletcher. I'm Erste's oil and gas analyst. For those who might be not familiar with what IGRC stands for, it is the abbreviation for the International Gas Research Conference. IGRC 2027 will take place in Budapest, Hungary in May 2027. This crucial and important event will be organized by MVM Synergy, Central and Eastern Europe's leading gas and power company, and the International Gas Union, or IGU, the largest global association of natural gas companies. Our distinguished guest today is Mrs. Natasha Fielding from Argus Media. Natasha manages the European gas, global LNG and biomass editorial teams at Argus Media. She was editor of Argus' daily European natural gas publication between mid-2020 and early 2025. As a gas market reporter, Natasha specialized in Northwest Europe. Argus is the leading independent provider of market intelligence to the global energy and commodity markets. The daily gas report provides news and analysis and includes price assessments that are widely used across the market. Natasha, welcome to our show.
Thank you.
For your information, we are recording our podcast on the 14th of March 2025 at 1 p.m. CET. So, Natasha, we are living in a turbulent state of the world right now. The situation may unfold on a different path as we see today. The first topic I would like to touch with you is the European gas prices. Why have European gas prices remained high and volatile compared with the pre-2022 period? What is your view?
Yeah, thanks, Tomasz. So it's an interesting question because if you think about it, we're now over 3 years on since the start of the full-scale war in Ukraine, which brought a huge amount of turbulence to the European gas markets as Europe faced first the threat and then the reality of losing most of its Russian gas supply. Now that we're 3 years on since then, there's kind of the question, when are we going to return to normal? But what I would say is that there's been a paradigm shift in the European gas market, which means that we have a much more finely balanced market, and even small shifts in something like weather forecasts are having an amplified effect on prices. I would say it's probably 3 main reasons for this. Firstly, Europe has replaced its Russian pipeline gas mostly with LNG, liquefied natural gas. And this exposes Europe to the global LNG market. Europe now has to compete for that LNG supply with Asian markets. On top of that, it's not just a question of the loss of most of this Russian gas. Europe's domestic gas production is in long-term decline. And as it's declined, it's lost a lot of its flexibility. And then the third thing I'd highlight, if we're coming down to the question of why are prices so volatile, is that gas's role in the power sector is changing. It used to be that Europe could burn more coal at the expense of gas when the gas markets were tight, but now coal is being phased out, and gas-fired power generation is increasingly determined by how windy it is, how sunny it is. It has to balance out intermittent renewable power generation.
If I understand correctly what you say, if we would get more pipeline gas instead of LNG, and if we would get more traditional way of power generation like coal or nuclear, this would decrease this kind of a volatility. Do I understand this precisely? Is this what you meant?
Exactly. So yeah, on the one hand, on the pipeline gas side, Russian pipeline gas was promised to European buyers under long-term contracts. It was kind of guaranteed as a source of supply for the market. LNG is completely different. Most of the LNG that Europe gets is sourced on the spot market. Europe has to potentially compete with other buyers, mostly Northeast and increasingly Southeast Asia, for those molecules. And then on the power sector side, it's the reality of the energy transition that we're seeing the phase out of coal, also the phase out of nuclear, and gas is needed to balance out renewable power generation, which is intermittent. And until we have technologies like a huge amount of battery storage, which would allow for renewables to kind of replace gas in the power mix, that's kind of the reality that we're faced with.
I see. The next topic I would like to ask your expertise is the regulation, especially the storage regulation, which we hear a lot these days. So what is the current regulation in the European Union regarding filling up natural gas storages?
Yeah, so there's an EU regulation that prescribes that storage capacity across the EU has to be filled to 90% by the start of November. But within that regulation, there is quite some flexibility. So some EU member states have exemptions from that 90% target. And there's also in the regulation, if you read it, you can see that there's a 5% leeway. So if member states miss their targets by 5%, then there's no consequences for them. So if you factor all that in, and then you also factor in some national targets, actually the EU only has to fill 78% of its storage by the start of November.
As far as I know, the current regulation also sets certain milestones between now and November. So how does this look like? Should we fill up the storages, let's say, in one block, or should we do it in a continuous way? So what are these milestones, or how does it look like? And I'm also pretty much interested in that who is the one who makes the final word over here, who makes the decision, and if this is the member states or the European Union, who has the responsibility to keep this regulation, and who is forcing, the participants to follow the storage limits or the storage targets?
Yeah, that's a good question and an important point about the intermediary targets. So the EU regulation, as well as stating that we have this 1st of November target, it also sets various targets for other points of the year to make sure that EU member states are on track, not to empty their storage too fast in the winter and not to wait too long to fill their storage in the summer. If you look at EU storage inventories right now, they're quite a bit lower than they were this time last year and the year before. If EU countries wait and companies wait a long time before filling their storage this summer, then they're going to have a hard job reaching those targets by the beginning of November. So to your question, there needs to be a kind of steady refilling of storage in the summer, and in the winter, companies need to, for security of supply reasons, they need to be wary of drawing down their storage too fast early in the winter, just in case we get some cold spring weather that drives up gas demand.
Mm-hmm. What would happen if a member state breaches this obligation? Let's say if they can accumulate even 5% less than the target, what you mentioned as the leeway. So what would happen if a member state cannot reach this intermediary or final target for the storages? can this country get a penalty, or is there any other way that the EU would intervene in this case?
Yeah, this is the very question that a lot of traders have been asking recently. In other words, does this EU regulation have teeth, to use a kind of strange English expression for it? The regulation is pretty vague on the penalties, and one thing that traders have looked closely at is what happened in November 2024. Actually, Denmark missed its 90% start of November target by quite a lot. In the regulation, it says you can, if you miss your target by the 1st of November, you have a month to meet the target, so bringing it up to 1st of December. Denmark also missed that target by quite a bit. It actually withdrew from storage in November, and it faced no consequences. So that is a big question of actually, will the European Commission do anything if member states miss the targets? That's a kind of, I guess, an ambiguity in that regulation.
Well, it's very, very interesting. I didn't know that, and it seems like that, the speculation, what we saw on the market in the last few months was based on a pretty vague regulation, not a clear-cut rules, as you said before. What is your view? How has the current regulation contributed to the recent TTF price rise? I read somewhere that at the beginning of February, almost 300 terawatt-hour of net long position was in TTF. So that's a pretty substantial amount. That's almost like 7-8% of the European consumption of natural gas. Was this the reason, this European regulation, in your view, for this huge increase in the net long positions by the side of the financial investors?
I would say, yeah, it's certainly a contributing factor. I mean, the storage regulation has actually had kind of an unintended consequence of negatively influencing the market-based incentive to actually fill storage. What I mean by that is that, having this rigid obligation to fill storage in the summer has supported the front summer gas contract at the TTF and elsewhere in Europe relative to the winter after that. Because if stocks are really low now, and you know that storage has to fill by the beginning of next winter, then your price risk is on the summer and not the winter. So we've seen summer prices move above winter prices, and you need the spread to be the other way around to actually provide a commercial incentive for companies, for traders to book and fill storage capacity, to add gas to storage in the summer when the price should be lower, and then sell it in the winter when the price should be higher. So definitely the storage regulation has contributed to this unusual market situation we have at the moment with what what traders would call inverted summer-winter price spreads, and that's quite a quandary for the gas market for this summer, which still hasn't been resolved. We will have to see how it plays out this summer.
I see. I believe the European Union should do something with this situation. What is your guess? What are the expected future changes? Would the European Union change the current regulation, maybe even cancel this obligation and let the market forces, to move the prices, or would they stick to the current regulatory framework?
So we've actually seen that the European Commission on the 5th of March proposed prolonging the storage regulation by another 2 years. It is now at the moment due to expire at the end of 2025. So it actually plans to lengthen the regulation. At the same time as proposing that extension of the regulation, the Commission also issued a recommendation to EU countries to introduce flexibility when deciding on their measures to refill storage. It was quite a vague statement. It left the door open to potentially introducing more flexibility into the regulation. But it seems that, for now, the European Commission, as well as some governments, have been basically highlighting the fact that, as I mentioned before, that there is already flexibility in the regulation. And that has had some positive effect on the market prices, in the sense that we've seen the summer premium to winter fall away a bit. So while, late January, early February, the TTF summer premium to winter was like 5-6 euros per megawatt hour. It's now, as of mid-March, and in recent kind of weeks, gone down to 1 to 2 euros per megawatt hour. So these statements kind of highlighting the need for flexibility, suggesting that member states shouldn't put all their efforts into filling storage at any cost, have helped to kind of push some of the price risk from the summer to the winter, if that makes sense.
Yeah, I think it's clear, although I think this is still a punishment for those players who have the obligation to buy the natural gas quantities during the summer, because they have to buy at a higher price than they potentially can sell it in the winter. I also heard this kind of a German proposal to make some subsidies or compensation for these players, mostly gas retail companies, who are obliged to buy and fill up the storages during the summer. Is this a kind of a good approach in your view to tackle this situation?
Yeah, so we have seen, as you say, Germany proposing subsidizing storage injections this summer if the summer-winter price spread stays, the wrong way around. I think it's an interesting innovation by the German government. What was kind of interesting to see was how the market reacted to this. We saw a big change in the price spreads, and we saw a lot of skepticism among traders and people just wondering, how can we play this? How can we make the most money out of this situation? Which I guess doesn't bode particularly well for the success of that kind of product. But I do think that we need some kind of fresh thinking, innovation around regulation, and a real an attempt, at least, or we need to see the use, as far as possible, of market-based measures to get storage filled, as opposed to intervention in the markets by state.
Honestly, I see a kind of a risk, if this subsidy system steps in, that some way the government would lock in this inverse forward curve, because this would mean that the players who are obliged to buy the gas, they would definitely buy, because we would get the subsidy anyway from the state. So why we should not follow the regulation, and would this kind of a buying would keep this inverse forward curve. So I mean, higher summer prices versus the winter prices, which is abnormal. So during normal circumstances, this is just the opposite. Yeah.
I mean, there is that risk, but then there's always, I guess, here what you might say is that we're faced with having to choose between 2 points of the energy trilemma. So you've got the security of supply consideration, and then you've got the kind of price affordability of gas. Europe does need to make sure that supply is secure ahead of the winter. We never know what the winter will bring in terms of weather and in terms of unplanned supply disruptions. There is a lot of new LNG export capacity due online, but there might be project delays, so that's something to consider for next winter. But on the other side, there's the question of at what cost does that supply security come? Do governments need to fork out a huge amount of money to subsidize storage injections again this year? It happened in 2022, a huge cost, and the market is still feeling the repercussions of that, and it's led to higher retail prices in the end.
So that can explain some way the intervention by the governments. to keep this security of supply or offer this security of supply to the market. I see. Let's jump to the next topic I would like to discuss with you. That's basically Donald Trump's foreign trading policy. We heard a lot recently about the new tariff ideas, and it basically also concerns the energy markets, the LNG markets themselves. So what are the impacts of Chinese 15% tariff on US LNG imports introduced in response to Trump's 10% levy on all Chinese imports? What is your view?
So I would say that the short and medium term impact of China's 15% tariff on US LNG imports may actually be quite limited. Cargoes from LNG cargoes from the US made up less than 6% of China's LNG imports in 2024 and about 3% of its overall imports. So this is a relatively small slice of the supply mix. And actually, most Chinese LNG importers can avoid the tariffs by shuffling trade flows around. So they can deliver non-US cargoes to China, and then they can resell their US offtake to other markets. So we see a fairly limited impact. And actually, this is a mechanism that's been well tested. In 2018 and 2019, during the previous Trump administration, China imposed a 10% and then later a 25% tariff on US LNG imports. And we saw that exact thing happen, that we saw this kind of reshuffle of trade flows and actually, in the end, a fairly limited impact on the global LNG market.
So basically, the Chinese can buy Australian LNG instead of the US LNG, and US LNG can go to other Asian buyers who would have bought the Australian cargoes. Is this the way how the situation can be tackled, or that's what I understood what you said?
Yeah, exactly. So most most of Chinese companies' US LNG contracts don't have a restriction on where the cargoes go. So while Chinese companies may, take those cargoes home, if you like, when the demand is there, they can also choose to sell those cargoes into other markets. So they could sell their US LNG cargoes into Europe instead, which may well be the more profitable destination. And then they could, instead of getting those US cargoes to their home markets, they could take cargoes from elsewhere, like Australia, for example, instead.
Okay, understood. It's very interesting. Let's talk a little bit about the future shape of Europe's natural gas supply. Natasha, what are the key physical, legal, and political aspects of Russian pipeline gas or LNG coming to the European Union with larger volumes? I mean, in the last few days, we heard a lot about the potential restart of the Nord Stream 2 pipeline. There's also a lot of talks about the Arctic 2 projects. So what are the key status at the moment? What do you see here?
Yeah, it's an important question. I think, all eyes in the gas trading community at the moment are on the progress of, potential negotiations towards peace in Ukraine, what it could mean for Russian pipeline gas and LNG and its future in Europe. There are a bunch of legal, political, kind of physical obstacles to more Russian gas arriving. Take the Nord Stream 2 project. This pipeline was actually completed, filled with gas before February 2022, before the start of the full-scale invasion of Ukraine. The German government at that point had not yet certified the pipeline, and it would need to do that for any gas to flow. So that's, just one example of a restriction. There's also been damage to both streams of the Nord Stream 2 pipeline and one stream of the Nord Stream 1 pipeline. So, not all the routes that used to carry Russian gas to Europe are still intact. There's also a lot of legal bad blood between Russia's gas seller Gazprom and its former European customers. Any European firm that has gone into arbitration in Europe has actually broken the post-2022 Russian law, which says all arbitration has to be in St. Petersburg. And then in St. Petersburg, the arbitration rulings against those firms have included some huge fines. So we have, a lot of restrictions on that side. You mentioned LNG there, and Arctic LNG 2. That project, that's quite an interesting one to look at in the context of whether we're going to see higher Russian exports to the world. There are US sanctions on the Arctic LNG project, and that's really stopped the project from delivering any cargoes. If those sanctions were to be lifted, there's not much other red tape that would stop LNG exports from increasing. So that's one that we should be watching in the coming weeks and months.
Okay. Do you see, or how do you see the LNG ramp up on the side of the US and Qatar? Would it be more like an option for Europe from 2026? Shall we receive more LNG from these areas? I've heard a lot of news about the delays of these projects, especially on the US side. So could we expect this LNG from 2026, I mean the US LNG, to arrive to Europe?
Yes, so there is, as you say, there's a huge amount of LNG export capacity that's due online really in the next 18 months. And this will quite dramatically alter the picture for not just Europe, but the global market. Once those projects are online, it's mostly from the US and Qatar, as you say, it will bring a lot of extra supply available to both Europe and Asia. Based on the forward contracts that we're assessing at August, we also see backwardated prices. We see lower prices as we go later into the decade, really reflecting that increase in supply. However, the timing of those new plants, the new LNG export plants, when they come online, that's going to be key to when we see this wave of supply, when we see this loosening global supply-demand balance. Big projects do tend to run late. We've already seen some delays. And while we can be fairly certain that by the end of the decade, we will have significantly more LNG supply available for Europe and Asia, whether, for example, a lot more supply is available by next winter is a big question.
Mm-hmm. I've heard a lot of risk factors. I tell you a few one, and please tell me what of these factors would be really the ones which are really, delaying these projects or pushing the costs higher. One of the risk factors I've heard is that the steel tariffs by the Trump administration that can push up the prices of the liquefaction plants, they can push the prices higher. I've also heard that some of these LNG supplying companies, they try to sign long-term agreements with the buyers, while the buyers, they prefer the spot markets. And also there were some news or rumors on the US markets. If the US gas prices would increase due to this ramp up of LNG capacities, maybe the US administration would some way lower the available gas for the LNG plants. What are the risk factors among these which can be relevant in your view?
Yeah, so I guess I would kind of categorize this question around risks for US liquefaction projects into two. So first, there's the projects that have already reached a final investment decision. They're already under construction, and they are due to come online, within the next couple of years. For those projects, it might be the kind of more typical construction delay reasons that might lead to delays, and perhaps the higher cost of some materials might delay things. Then there's all the projects that haven't yet reached a final investment decision. For those projects, concerns such as companies not wanting to commit to long-term contracts, the kind of the investment environment and the political environment for US LNG projects, concerns around potential increase in domestic US prices, whether that impacts the political policy, and this is going beyond the Trump regime, perhaps into the next regime. That is going to have a big impact on the out of all those projects that are hoping to companies that are hoping to develop new LNG export projects, how many actually reach a final investment decision and come online? That's an open question. I mean, it certainly seems like we won't see all these projects being developed, and yeah, how many actually come online? There are lots of risk factors, as you say.
Do you have a figure in your head what percentage of these projects can be accomplished and running until 2030 from those ones which were already announced? So what is the realistic value here? 2/3, 75%, or 100%, or less?
It's very difficult to say. I would be extremely surprised if we saw 100% of those projects coming online. Even maybe 70, 80% might seem a bit optimistic. I think it will be important to watch over the next year to see which projects do reach a final investment decision, whether we see some projects being scaled down or announcements about some kind of workforce being laid off, like those kind of things, watching for signs of the wider environment, and also the wider economy, because all of these projects need they need interest from buyers. It's really Asia and not Europe that's going to underpin the demand growth. So the Chinese economy, the state of the Chinese economy, how much extra gas and LNG demand is really gonna come from there, is all of that is going to have an impact on how many of these projects come to fruition.
Okay. Looking the supply situation in Europe, what other opportunities do we have? Where can we get gas from outside of LNG and Russian gas? I mean, how do you see the situation in Norway? Do we have any chance to increase the import from Azerbaijan? Do you see the domestic production, especially the Romanian deep sea investments, can they yield further natural gas to the European marketplace? I mean, what is your view here? Where do you see the largest opportunity?
Yeah, so I might start with Norway, which is now that Russian pipeline gas has most of it's exited the market. Norway is by far Europe's biggest pipeline gas supplier. The Norwegian government expects gas production to hold high and stable in the next 2 to 3 years, and then to start to decline towards the end of the decade. We've actually already seen weaker Norwegian production this winter. Daily deliveries from Norway to Europe this winter have peaked, just to give you a kind of number on it, they've peaked at about 345 million meters cubed per day, against 360 million meters cubed per day last winter. So we might have already seen a Norwegian production peak. As for other sources of supply, I think the Romanian Neptune Deep project is a really interesting one, particularly in the context of a decline in production in the UK North Sea and in the Netherlands. Romania expects its domestic production to basically double to up to 18 to 20 billion meters cubed per year by 2027, once Neptune Deep comes online, if it comes online on time, from about 8 to 10 billion meters cubed per year at the moment. That's a sizable increase, and it will have quite a big impact on regional supply. This region still gets quite a lot of Russian gas at the moment, in addition to Azeri gas and LNG. So that's quite an interesting one that will kind of reshape the balance in Europe.
And what is the reason that Norway cannot produce more natural gas? They don't have enough reserves, or any other reasons that they cannot ramp up the production?
I think a lot of it comes down to the need for growing investments in gas production as the bigger fields decline. There's a lot of gas production potential in Norway. A lot of it is in the Barents Sea, where environmental concerns have so far prevented almost all of the gas from being exploited, which also means there's barely any infrastructure in that area at the moment, no pipeline gas infrastructure. So to actually develop that area, you'd need a lot of investment. You'd need to overcome and address environmental concerns. So certainly there is gas production potential there, but there's a big question mark over whether it will be exploited and whether investments are going to be enough to keep up and to offset the declines in the maturing North Sea area.
And does Norway have some concerns about the long-term demand in Europe? Is this one of the reasons that they don't believe that these faraway reservoirs should be developed?
I think a lot of it also comes down to the demand for that gas in Europe. There's a clear push to the energy transition in Europe and a move away from long-term supply contracts to shorter-term contracts. And you need for any investment, whether that's Norway, Azerbaijan, or even looking at these US projects, they need to be underpinned by long-term contracts. And the difference between a Norwegian project and a US LNG project is that for the Norwegian project, all that gas is going to go to Europe. So you need the investment by European companies, and the demand environment in Europe is we will see a decline rather than a rebound in demand in the coming years. So that's an extra difficulty for this pipeline gas transport as opposed to LNG, where we will see continued growth in Asian LNG demand.
Oh, and that's understandable. The last area I would like to ask your knowledge is basically your experience of the last 3 years. What was the reaction of Argus readers since this gas crisis erupted in Europe? So has the interest of the readers changed after February 2022? And what are the new favorite topics, themes, or requests by the clients since this war between Russia and Ukraine erupted?
Yeah, that's an interesting question. We've seen so much turbulence in the gas markets since February 2022, and therefore the needs of readers have also been kind of shaken up as well. There's been a lot of interest in gas demand from industry. That's I guess one kind of change that I've noticed, because the spike in gas prices led to a cut in gas demand from various industries, and not only our readers but also my colleagues covering different commodities have suddenly become interested in gas prices. And I get lots of questions these days around what is the switching price between natural gas and LPG, and is there an incentive to import ammonia to make fertilizers or produce it domestically, or what's your outlook for the steel sector's gas demand? those kind of questions were much less frequent before 2022. I guess another area where we've seen a change in readers' interests is more on the reflecting a change in trading behavior from in Europe. So, with a lot of Russian gas leaving the market, we've seen a big shift in flow patterns. We've seen higher liquidity in Southeast Europe. So we've seen requests for new price assessments, which we've responded to with new price assessments for Romania and for Greece. And then I guess a final point, as well as seeing this kind of difference in regional interest, we've also seen just a much more global interest from our readers. The gas markets have become much more interlinked. So we see, our European readers want to know what's going on with Australian LNG strikes. Our US readers want to understand European gas storage. People reading and like in Japan, who are involved in the LNG market, they want to know what's going on in the US upstream gas sector. That kind of the need to think globally has actually got us to at Argus to talk to our colleagues a lot more and to come up with a more global gas and LNG service.
Okay, so just to summarize, the European consumers realized how important is natural gas. So you have much more interest from the side of industrial players as well as traders, speculators, and investors, as far as I understand. Natasha, it was a pleasure to talk with you. Thank you very much. I really learned a lot of insight from you, and I think our listeners also understood much better the European market and the key challenges what we have. So Natasha, thank you very much again.
Thank you so much, Tomasz. It's been great.
Thank you for listening to our podcast. Stay tuned for the upcoming episodes of IGRC 2027 Budapest podcast.